An investable index is a special thing. But if I think about the key points that one should consider, the first that comes to my mind is transparency, information. Private equity, private debt, venture capital, all private markets are by definition opaque. And the greater transparency, the easier to expand the investor base. So benchmarks, or even better, if it works, an investable index is something that is very useful to attract investors and to give confidence to investors. That's the first point. The second point is that, and I kept on saying private credit, private equity, venture capital, diversity within the private markets means that there's not one thing that fits all. Creating an index for venture capital is a much more complex thing than creating something that works for private credit, for instance. And I did some research, and they do exist, venture capital indexes, but very complicated. And the underlying activity must be very, very deep in order for them to function. The third is something that relates to performance and to costs. So if you really believe that the market that you are looking at is going to perform well, the average performance is probably something that you can aim for, rather than having an active selection with all the costs involved and the responsibilities and so forth. So that's a very important thing, and it opens up for something very interesting, different investor base. I mentioned the word retail, and we will expand later. The last point is probably the most difficult one to crack, and it's liquidity. Something that is investable must be divestable, and if you don't have a liquidity in the markets, depth and volumes, or a market maker, then it becomes a bit of a useless case.